The evolution of Bitcoin, a decade of digital currency. Bitcoin, the first and most well-known cryptocurrency, has emerged as a revolutionary force in the financial world, challenging traditional perceptions of currency and financial transactions. Over the past decade, its evolution from an obscure digital token to a major financial asset has been both tumultuous and fascinating. This article traces the journey of Bitcoin, examining its origins, technological innovations, market dynamics, regulatory responses, and the broader impact on the financial landscape. Origins and the Genesis block. The story of Bitcoin begins in 2008, when a person or group of people under the pseudonym Satoshi Nakamoto published the Bitcoin white paper. This document, titled Bitcoin, a peer-to-peer electronic cash system, proposed a decentralized system for digital transactions without the need for a trusted third party. The timing of this proposal was critical, coinciding with a growing distrust in traditional banking systems following the 2008 financial crisis. Bitcoin itself came into existence on January 3, 2009, with the mining of the Genesis block, Block 0. The embedded message in this block, the Times 3 January 2009 Chancellor on brink of second bailout for banks, not only serves as a timestamp but also as a poignant remark on the economic conditions of the time. Technological foundations. At its core, Bitcoin is underpinned by blockchain technology, a decentralized ledger that records all transactions across a network of computers. This technology ensures that transactions are secure, transparent, and immutable. The decentralized nature of Bitcoin is facilitated through a consensus mechanism known as proof of work, POW, which requires miners to solve complex mathematical problems to validate transactions and create new blocks. This innovation addressed a fundamental issue in digital currency, the double spending problem. By ensuring that each transaction is verified and recorded on a public ledger, Bitcoin provided a viable solution for digital currency to operate without the need for a central authority. The rise of Bitcoin. Bitcoin's initial years were marked by obscurity, where it was predominantly used within tech and libertarian communities. The first known commercial transaction using Bitcoin took place in 2010, when programmer Laszlo Hanieks paid 10,000 Bitcoins for 2 pizzas, an event now celebrated annually as Bitcoin Pizza Day. This transaction set a benchmark for the valuation of Bitcoin in real-world terms. The period from 2011 to 2013 saw increased visibility for Bitcoin. It began to gain recognition not only as a speculative investment but also as a means of circumventing traditional banking infrastructures, particularly in countries with unstable currencies or restrictive monetary policies. However, this period was also marked by volatility and security concerns, highlighted by the infamous collapse of Mt. Gox, once the largest Bitcoin exchange, in 2014. Regulatory landscape. As Bitcoin's popularity grew, it inevitably attracted the attention of regulatory bodies worldwide. The responses have been varied, ranging from strict regulations and outright bans in some countries to more embracing approaches like Japan recognizing Bitcoin as legal tender in 2017. The regulatory environment has significantly influenced Bitcoin's adoption rates and price fluctuations. Maturation and institutional adoption. In recent years, Bitcoin has seen a maturing market with increased institutional interest. Major companies and financial institutions have begun exploring and investing in Bitcoin, acknowledging its potential as both a hedge against inflation and a digital store of value. This shift was epitomized by several high-profile endorsements and investments, from Tesla's $1.5 billion investment in Bitcoin to the launch of Bitcoin futures trading on major financial exchanges. Moreover, the technology behind Bitcoin has also spurred a proliferation of other cryptocurrencies and blockchain applications, extending its influence beyond mere currency to sectors like supply chain management, digital identity, and beyond. Challenges and the road ahead. Despite its successes, Bitcoin faces numerous challenges, including scalability issues, environmental concerns due to the energy-intensive nature of mining, and continued regulatory scrutiny. Additionally, the volatility of Bitcoin remains a critical barrier to its acceptance as a mainstream medium of exchange. Looking ahead, the evolution of Bitcoin will likely involve significant technological advancements like the implementation of the Lightning Network to address scalability and speed. Furthermore, as societal attitudes towards technology and finance continue to evolve, Bitcoin may see greater integration with traditional financial systems. Conclusion. From its inception as an ideological statement against centralized banking to its current status as a major financial asset, Bitcoin has dramatically altered the landscape of digital currency and finance. As it enters its second decade, the journey of Bitcoin remains one of the most compelling narratives in the technological and financial worlds, reflecting broader shifts towards a more decentralized and digital global economy.